The healthcare sector has been feeling some hurt lately. It's our chart of the day. In fact, check out the group turning negative for the year. It's the worst performing sector in the S&P 500. The cause? The health insurers like UNH, Cigna, Anthem, and Humana all down again today, weighing on the sector. One of our traders thinks healthcare might be the cure. And you alluded to this, defensive.
Yeah, I think when the profit cycle is slowing, you got to buy more defensive sectors. I mean, you talked about industrials, you talk about tech, you talk about financials. Tech and financial are two of the three worst performing sectors as the profit cycle is slowing. So I think healthcare makes a lot of sense. You know, we look at profits, liquidity, and sentiment. Profits and revenue growth, top line growth for the healthcare sector is probably the best, or one of the best in the S&P. They're the only sector where analysts are actually taking up top line and bottom line estimates, and they're cheap on basically every metric you have. So I think, you know, there's a huge demographic story in there, and to get that demographic story at a discount to history, I think is a great opportunity because it's trading off of headline risk. This is not new news. I mean, this is probably going to be part of the sector's story for a long time, is that it's going to be a very political hot button issue, especially as we get closer to the election. But this is not dissimilar to the fact that when, you know, a couple of years ago, Hillary tweeted about drug pricing, she was going to crack down on that, weighed on the sector in the near term. But over the long term, if profit cycles are slowing and the profits are going to hold up well, that's what we're focused on. I think that that'll do well for the sector.
You bought Anthem just the other day.
I had some going into this, and then I bought some 2 days ago. I tried to buy some today, tried to actually buy some options today. They were kind of thin and wide, so unfortunately I didn't get anything done. You know, I think that this is really, really overdone. Obviously, 2 days ago, I bought it at a much worse price than it is today. But everything you're saying, I mean, these are great companies. They're profitable companies. They are in a sort of vortex of negative news. And so I like it when things trade down by integers or $10 at a time. Now, I've had enough liking it. I'd prefer it to sort of bottom out right now, but I think it's very attractive here. I think you're going to see this die down. We've seen this threat several times before over the last, ever since Obamacare, actually. And so I think we'll see it die down, and there's value here, tremendous value. These are great companies. PBMs I'm concerned about.
When are the elections, Guy? Not a trick question.
When are the elections?
Not a trick question.
November 2020. Is that right? Can they do that ding ding when I'm trade it?
Yeah. Got it.
Brilliant.
Why do I ask? I'm that?
Because you wanted to make me look foolish on national TV.
No, I knew that you knew it, obviously.
I don't know, I'm just asking a question.
Because the headline risk to this group will last through at least.
Yeah, I disagree. I agree with that
November
in some ways.
2020.
I disagree with that. Go ahead, Karen.
I wanted to add one other point.
Sure.
Anthem, you know, I just looked. They have $5 billion left in their buyback. I did call them today. I didn't hear back from them. I wanted to know maybe they'll increase their buyback. I don't think they'll be out there before they report, but it wouldn't be surprising for me to see some of these HMOs out there, these managed care companies, do big buybacks with the stock tier.
But you are correct. I mean, you have obviously until November 2020 where this will be in the crosshairs to a certain degree. I think it'll wane in terms of the rhetoric. But, you know, you look at UNH, for example. Look at the quarter yesterday. It was an outstanding quarter. They actually raised guidance. You have a stock that now is trading at 13 times forward earnings. The last 5-year average has been 17. It's traded as much as 21 times forward earnings. That's the good news. Bad news is 96% of the analysts out there have a buy on it. I don't think there are any sells on it, which is a bit of a problem because now you might have some analysts reversing numbers. That being said, I mean, you're talking about trough valuations at a company that's still doing extraordinarily well, where people are now just shooting first, asking questions later. So I think you have to be on board. I don't think any of this stuff is going to go through. The rhetoric's going to die down. And in a couple months from now, we'll say UNH, wherever it is now, 220 or something was a gift.
And look at the broad sector ETF XLV, right? Look at how that traded today. Huge volume on this kind of puke type of thing. And in my experience, when I feel like I want to vomit on my shoes, those are the best trades. So that's what today in healthcare looked like.